The US dollar is still below the key 100 psychological level against a basket of its major peers, yet the euro-US dollar has failed to meaningfully rise above the 115 level as FX markets continue to weigh up the effect of Trump's trade tariff turmoil and look for evidence of its impact in hard data. I'm Fiona Cincotta, and to discuss the FX outlook, I'm joined by Global Head of Retail Dealing, Alex Ridges. Thank you for joining me, Alex.
Hi, Fiona.
Hi there. So we've seen the old world turned upside down over the past few months. What's the USD outlook going into today's US CPI report?
Well, I think by the time this video is out, we'll have seen what the US CPI has done. So I think in some ways I can talk quite freely about it, which is good. We're expecting 0.2%, which on the face of things, I think is really good. It's like 0.2%, times that by 12, 2.4% inflation. You know, we'd all be happy with that. But where I'm sort of almost seeing things differently is normally we'd expect to see high CPI will mean inflation's up, rates are up, the dollar's going to rise. I'm almost seeing the opposite at the moment, where I think that actually a low CPI figure coming in low will sort of point to a bit of stability in the US. So I think actually this time we're going to switch, where a high CPI is going to be bad for the dollar, and a low CPI is going to be good. It's going to suggest stability, and everyone can trust the US economy.
So are the classic drivers of cause and effect in FX markets breaking down then?
Well, I think, very much in the short term, yes, and I suspect it'll be the short to medium term, where before we've seen, traditionally markets they want growth, so investors want growth. They go where they think the most growth is going to occur, within reason, of course. But actually, at the moment, there's a real sort of drive away from growth to stability. Investors want stability; they just want to know their money is safe. It's quite a sort of strange pause, where normally this happens when we've got a recession's negative outlook. But actually, the world is growing. But I wanted to mention that actually, in recent days, we've seen this sort of gold is now officially the second reserve currency of the world. So the dollar, of course, is way ahead. And I think that's like 2.5 times the euro in terms of its sort of world reserves held elsewhere. But actually, even gold, with no returns whatsoever, is now in number 2. So I think that explains my point.
So has the euro not benefited from US dollar uncertainty?
Well, it has to some extent. I mean, we've had Christine Lagarde talking about this as being a sort of a global euro moment, i.e., this is the moment for the euro to step up and become the world's new dollar. And we've seen the euro rally from 108 to 114 during this period of uncertainty. And I think you can look at factors such as political stability for that, and again, just its scale. So it's only the only real viable option. But as you said in the build-up, that we've really struggled to break 115, and it's very interesting that even since Liberation Day, the official name for it, we've actually seen hedge funds and the sort of central banks being net sellers of euros. So we're expecting them to be piling on, building up positions and just building up exposures as that safe currency. We haven't seen that play out.
So do you think that's why we haven't been able to see a sustained break in the euro-US dollar above that 115 level?
Well, that's it. I mean, we've been expecting the euro to become comfortably the second reserve choice, as I just said. But actually, the euro, more than any other currency, is deeply embroiled in the Trump tariff situation, because it's a massive exporter of automobiles, sort of machinery and luxury goods. So that's almost just been holding back the euro, that until we know the outcome of sort of what tariffs the US is going to hit, they're still embroiled in the turmoil. And in some ways, if Donald Trump realizes this, he'll almost want to extend the uncertainty to sort of keep the strength and keep the dollar as the reserve currency of choice.
So there are a number of central banks with rate announcements coming up. How do you think this will impact the outlook?
Well, for the major currencies, I hate to say it, it's actually looking quite boring. That for the dollar, we have got a rate cut predicted about September. So the markets are saying there's zero chance in the short term in June and July. And then for sterling, again, September's looking to be the first break point. And then for the euro, September, but possibly even we're looking to December to see any rate cuts. So it's got a little bit quiet there as the major central bankers are being a little bit cautious. But where we are seeing moves is the Swiss bank is sort of very keen to distance itself away from strength. So The next meeting, I think there isn't until July, but we're expected to see sort of, there's more likely to be two than none, if you see what I mean. So we're expecting one and a bit, 1.5 even. And also the Australian, then the next Australian meeting, there's almost, the markets are predicting almost certainty of a rate cut, and actually 3 rate cuts by December.
So are predicted rate cuts in the Swiss franc and the Aussie causing weakness in the respective currencies?
Well, again, I think as we were talking about the US CPI earlier, where what we'd expect to be happening, this isn't necessarily playing out. The Swiss franc is as strong as it's been since 2015, since the Swiss decoupling. And I don't see anything that the central bank can do, any rate cut there will change that. It is, while it's not going to be the reserve currency of choice because the Swiss economy is too small, it's still going to be rock solid. And the Australian dollar is already very weak. But I don't see that as a sign of sort of lower rates or anything like that. I just think sort of that is partially tied into the whole tariff situation. Yeah, sort of rather than a particular sort of interest rate driven play.
And so what's your outlook summary?
Well, yeah, so to summarise, I mean, I think, again, as I said, almost the idea where I'm not sure what CPI is going to do. I don't think it's going to follow convention. To me, that almost says that the dollar outlook, and to some extent the other major currencies, the outlook is quite uncertain, and possibly it means we're in for a sort of a little bit of lower volatility. But where I do see volatility is in the euro and the Aussie. As I sort of briefly mentioned, I think we're going back to sort of Trumponomics. What is the play? How are tariffs going to pan out? I think we've almost had that period where there's been that slight malaise about tariffs. You hear it in the news, you sort of switch off. But I think there's a lot of volatility to come. Again, could be either direction: tariff good, tariff bad for the euro and the Aussie. So for me, they're where we're going to see volatility, and I'm expecting sort of a relatively quiet summer in other currencies.
Excellent. Well, thank you very much for your analysis, Alex.
Thanks, Fiona.
For more videos like this, please do like and subscribe.